So welcome to our 30-second version of the Genus Weekly In Focus COVID-19 video for Friday, October the 24th, 2020. So my name is Mary Lou Miles, and I'm a partner and director of wealth management here at Genus. And once again, I'm here to interview Wayne Wischel, our CEO, co-founder, and chief investment officer. So Wayne, we had quite a week on the political front for COVID-19, the markets, and the economy. There's just so many questions to ask. But definitely elections seem to be the theme this week. So we have one in BC tomorrow, potential Canadian federal election that is now on hold. And of course, the US election is less than 2 weeks away. Speaking of the US election and reflecting on last night's presidential debate, which actually turned out to be a debate this time, what will a Biden win that seems to be factored in everywhere you're reading mean for the markets?
Well, I think the market's starting to look at a Biden win as in a more positive light. And they see whatever happens here in terms of the spending on the COVID as taking place after the election. And they see Biden probably spending more than a Trump because he has to deal with the Republican senators. So they see more stimulus coming in the new year if Biden wins, and more money on infrastructure, probably more spending generally. So in the short run, the market focuses on the short run, right? So it's seeing it more as positive than negative. And there's a hope that the Biden will track more to the middle once he is elected as well.
Right. So what is China? Who does China want to win? Biden or Trump?
Oh, no, clearly Trump has been a thorn in their side. Biden's more of a globalist. He likes to deal through the international institutions like the UN and WTO. So he'll be, I think, easier for China to deal with. And so he's definitely seen it in a more favorable light.
Okay. The other thing, Senate Majority Leader Mitch McConnell is not supporting President Trump's stimulus package. You know, what's going on here, and why would he, as a Republican, choose to block it?
Well, number one, Mitch McConnell is a great politician, and he can count very well, and he doesn't have the votes probably. The Republicans are more conservative on the fiscal side. They're concerned about long-term debt and everything else. So, and the spending they're doing now is massive. It'll be like over $4 trillion all in if they do the 2.2 that Nancy Pelosi wants. So compared to 2008 when it was a big deal that they did 800 billion. So this is a lot of money going out, and they're concerned about that and how it gets spent. And I think what we're seeing right now in terms of negotiations, it's a bunch of posturing in both sides. It's all politics. Pelosi wants to hold out. She has this big number out there. I think it's too much. It's unrealistic. So I think it's politics all the way around. Trump's making like he'll support it now, but he doesn't have the votes. It's all pre-election politics.
That's what it appears to be. So thanks for that. So now that even BC is joining most of Canada in the second wave of this pandemic, we had the worst daily infection count yesterday at 274. What is implication for Canada's economy near term? I also heard this week a term economic nutrition, which referring to the move to more local sources of food. Are we worried about food inflation heading into winter, and have we invested heavily in food stocks?
Well, we're not worried about food inflation longer term. I would say maybe in the short run, we're going to get a bump. It's running right now in the US around 4% year over year. What's going on, I think, is that we're seeing new supply chains being formed. People aren't going to restaurants anymore. But I think the market and the supply chains are adapting and will continue to adapt. And so longer term, we're not concerned about this. And names we hold in the portfolio are names like Tyson and Schmuckers. We have WH Group in Europe as well, and McDonald's. But that's not so much on food itself, but on services.
Yeah. So the beginning of these videos, when we started, I can't believe it's been 32 weeks, but we talked about the divide between Wall Street and Main Street. So are we seeing the widening of incomes between the rich and the poor? Has it widened significantly since March? And we know that the long-term widening of incomes has started over 20 years ago, not long before the pandemic. But we're concerned about the relevancy based on social unrest. So how does that potential unrest affect our investment decision?
There has been a widening. There's no doubt about that for two reasons. Number one, the markets have gone up, and that's tied to the class that have shares, that are wealthier, obviously, and have capital gains here. as well as the information, the technology sector has done really well. It's been the big winner in this space. So that area that where people are very, very educated and have technological skills has done very well, and they're winning in this environment as well. Whereas the service sector and some of the other areas haven't done as well. I would say the manufacturing area is doing well. It's picking up and going to do fine. And as is the construction area. There's a housing boom, a massive housing boom going on right now. How does this get resolved longer term? Well, usually the stock market has to go first. The stock market has to go first before it moves before the economy. So that's natural. And that's going to mean there's an advantage for the people that have capital. The only way that they can catch up longer term, the lower income, middle income households, is by the unemployment to fall. And we saw that prior to pandemic. The unemployment rate got down below 4%, and it really had an impact on the lower incomes. Their salaries started to go up. And Jay Powell mentioned that about 2 months ago, and that is their goal. He realizes that both the fiscal spending and monetary policy have not been easy enough over the past 10 years. They haven't, they were concerned about inflation when they got the unemployment rate down to 3% and down to 4%. They want to drive it down further now, because that's when they see the lower incomes get real income gains. And so there will not be a catch up until the US economy, Jay Powell and the administration get the unemployment rate down back to 4% again. That's when the lower income areas really catch up, and we get more parity.
Wayne, thank you so much. This always gives us a lot to think about. So I think that concludes our video for this week. Thank you all for watching. Please do reach out to your portfolio manager if you've got any questions. And for those of you new to Genus, please click the link on our website and one of our great team members will get back to you. As we head into what looks like a very different Halloween for trick-or-treaters across the country, we are conscious of the anxiety around all of this for many of our clients and their families, and of course our staff too. So as Dr. Bonnie Henry says, be kind, be calm, and be safe, and we'll see you all next week.